Breaking news for Canadian retirees. A major change in Canada's pension system is catching seniors completely off guard in 2026, and one small income mistake could quietly reduce or even stop your OAS and GIS payments. We're talking about up to $1,850 per month, money many seniors depend on to survive, now at risk due to new enforcement rules, income thresholds, and automated reviews. If you receive OAS, CPP, or GIS, or plan to apply soon, you need to watch this carefully. Because what you don't know in 2026 could cost you thousands of dollars every year. In the next few minutes, I'll break everything down clearly and simply. Who qualifies for the $1,150 monthly payment? What the 2026 rules actually say. The income mistakes that trigger benefit cuts, and the exact steps you can take to protect every dollar you're entitled to. No confusing government language. No speculation. Just facts, examples, and real-world guidance. Let's get into it. What is the $1,850 payment? First, let's clear up a big misconception. The $1,850 per month is not a single check. It's a combined payment made up of two federal benefits. One, old age security, OAS. Two, guaranteed income supplement, GIS. These are two separate programs with different rules, and understanding the difference is critical in 2026. Old age security, commonly known as OAS, is the backbone of Canada's public retirement income system and provides a guaranteed monthly payment to eligible seniors. To qualify for OAS in 2026, you must be at least 65 years old and have legally lived in Canada for a minimum of 10 years after turning 18. However, meeting the minimum requirement does not automatically mean you will receive the full pension. The amount you receive is directly tied to how long you lived in Canada as an adult. To qualify for the maximum OAS payment, a senior must have accumulated 40 years of Canadian residence after age 18. If you lived in Canada for fewer years, your OAS will be reduced proportionally, resulting in a partial monthly payment rather than the full amount. For early 2026, OAS payment levels continue to reflect inflation adjustments and age-based increases. Seniors aged 65 to 74 are expected to receive a maximum monthly OAS payment of approximately $742, while those aged 75 and older will receive a higher amount, around $806 per month, due to the permanent 10% increase introduced in recent years. This age-based boost is significant and can result in more than $900 in additional annual income for seniors over 75. Understanding these thresholds is critical, as OAS often forms the base upon which other benefits, such as the guaranteed income supplement, are calculated. A clear understanding of how OAS works in 2026 helps seniors plan more effectively and avoid unexpected reductions or missed benefits. Here's where many seniors get caught. If your income is too high, the government starts taking your OAS back. This is called the OAS recovery tax, or clawback. Starts when your net income crosses the threshold. Estimated to be higher in 2026 due to inflation. For every $1 over the limit, 15 cents of OAS is clawed back. At high income levels, your OAS can drop to zero. Common triggers: large RRSP withdrawals, selling property capital gains, unexpected investment income, guaranteed income supplement, GIS, the real money. Now let's talk about the benefit that truly makes the biggest difference for low-income Canadian seniors. The Guaranteed Income Supplement, or GIS, is a tax-free monthly payment designed to support seniors who are already receiving old age security and have limited additional income. Unlike CPP or OAS, GIS is strictly income tested, which means the amount you receive depends almost entirely on how much money you earn from other sources. Because GIS is not taxable and can exceed $1,000 per month, it often becomes the largest single source of income for seniors who qualify, making it the most critical benefit to protect under the 2026 rules. For 2026, a single senior who qualifies for the maximum GIS is projected to receive approximately $108 per month, as long as their annual income stays below the estimated cutoff of around $22,000 per year. Importantly, your OAS payment does not count as income when calculating GIS eligibility, which is why these two benefits can be combined. When you add the estimated maximum OAS payment of about $742 per month to the maximum GIS amount, the total comes to roughly $1,150 per month. This is the figure gaining attention in 2026, and it represents the highest possible combined federal retirement support available to a low-income Canadian senior, but only if income is carefully managed and all eligibility rules are followed. The GIS reduction rule, why it's the most dangerous part. The Guaranteed Income Supplement, GIS, is extremely sensitive to income, and this is where many Canadian seniors lose the most money without realizing it. Under the GIS rules, for approximately every $2 of income you earn from sources outside OAS, your GIS benefit is reduced by $1. This includes income from CPP, employment, RRSP or RRIF withdrawals, and even certain investment earnings. Because GIS is designed specifically for low-income seniors, the government gradually reduces the benefit as income rises. In 2026, with higher benefit amounts and stricter automated reviews, even modest increases in income can trigger significant reductions. This makes income planning more important than ever, because a small financial decision today can quietly reduce thousands of dollars in future GIS payments. A real-life comparison makes this risk very clear. Susan, age 66, receives full OAS and only a small CPP payment. By keeping her total annual income below the GIS threshold, she qualifies for nearly the maximum GIS amount and maintains a stable monthly income close to the full combined benefit. David, on the other hand, is 67 and lives a similar lifestyle, but makes one critical mistake. He withdraws $20,000 from his RRSP to cover expenses. That withdrawal is counted as taxable income, which immediately reduces his GIS entitlement by nearly $10,000 over the year. Nothing else changed. Same age, same needs, same expenses. The only difference was where the money came from. If David had withdrawn that same $20,000 from a tax-free savings account, TFSA instead, it would not have counted as income, and his GIS payment would have remained intact. This single rule explains why understanding income sources in retirement is essential to protecting your benefits in 2026. How CPP fits into all this. The Canada Pension Plan, or CPP, plays a central role in retirement income, but many seniors misunderstand how it interacts with other federal benefits. CPP itself is not income tested, meaning you can receive it regardless of how high your income is. However, every dollar of CPP you receive is counted as income when Service Canada calculates eligibility for income-tested programs like the Guaranteed Income Supplement, GIS. As a result, while CPP provides stable, inflation-protected income, higher CPP payments can directly reduce how much GIS a senior qualifies for. Due to the ongoing CPP enhancement, the program is gradually becoming more generous. CPP is now designed to replace about 33% of a worker's average career earnings, up from the previous 25%, and monthly CPP payments are increasing as a result. While this is positive for long-term financial security, it creates an important trade-off for low-income retirees. Higher CPP income can push total annual income above GIS thresholds, leading to reduced or eliminated GIS payments. This is why retirement planning in 2026 cannot treat CPP, OAS, and GIS as separate benefits. Instead, they must be viewed as one interconnected system, alongside personal savings strategies such as RRSP versus TFSA withdrawals to minimize clawbacks and maximize total monthly income. Top 3 mistakes that stop payments. Mistake number 1, not filing taxes. No tax return. GIS stops automatically. Even with zero income, you must file every year. Mistake number 2, using the wrong account. RRSP withdrawals reduce GIS, TFSA withdrawals do not. This mistake alone costs seniors thousands. Mistake number 3, not reporting income drops. If you retire or lose income, you can request GIS recalculation, use Form ISP 3041. Don't wait a full year. Protecting your retirement benefits in 2026 starts with staying actively involved in your My Service Canada account, which is the central hub where the government tracks your OAS, CPP, and GIS payments. Logging in regularly allows you to review payment amounts, spot unexpected reductions early, and read important notices that may require action. It's equally important to keep your mailing address and direct deposit information up to date, because missing a letter or having outdated banking details is one of the most common reasons payments are delayed or stopped. Filing your income tax return every year is absolutely critical, even if your income is very low or unchanged, since GIS eligibility is automatically recalculated using your tax return and can be suspended if no return is filed. Finally, any change in income, such as retirement, reduced work hours, or the loss of a spouse, should be reported to Service Canada immediately, as this may allow your benefits to be reassessed sooner and prevent months of lost payments. These small, proactive steps can make the difference between stable retirement income and sudden financial stress. The $1,850 monthly payment is real, but it is not automatic, and it is not guaranteed. It is only available to Canadian seniors who understand the rules, monitor their income carefully, and stay fully compliant with OAS, CPP, and GIS requirements. If this breakdown helped you protect even $1 of your retirement income, take a moment to support the channel by liking this video and sharing it with another Canadian who may be at risk of missing out. Subscribe now for verified, easy-to-understand Canada pension updates, so you're never caught off guard by sudden rule changes or payment reductions. And before you go, comment below and tell me which benefit concerns you the most, OAS, CPP, or GIS, because staying informed is the strongest protection you have heading into 2026.